Welcome to Framework Fortune. I'm your host Ben, and we've got our co-host HHTrader in the building, along with special guest and good friend of the Framework Fortune Network, Charles Allen, CEO of BTCS Inc., smashing earnings year over year, quarter over quarter, with an amazing business model. The first public node validator on the US stock market, uplisted to the Nasdaq, and paying out the first dividend in Bitcoin. How's it going, Charles?
Ben, thanks for the great introduction there. Really appreciate being on your channel again, and
Absolutely.
excited to talk about some of the fun things that we've got on the agenda.
Oh, absolutely. Do you want to give a little quick overview of BTCS for anybody who's new to it?
Yeah, I mean, I can give the quick overview of BTCS, and we're the first U.S. public company in the blockchain and crypto space. We went public in 2014. We've had many firsts. We were the first public company to mine Bitcoin back in 2014 and early 2015, before anyone knew what mining was in the public markets. We're the first public company that had a digital asset treasury strategy, well before the likes of MicroStrategy. In 2021, we kind of pivoted the business model again and became the first company focused on securing next generation blockchains. Specifically proof of stake blockchains and running the validator nodes with the goal of building a staking as a service platform. And in 2022, we actually, the value of our stock was trading below our cash and crypto values. So we, decided to pay a dividend, a one-time special dividend that was payable in Bitcoin. So that was pretty cool. So we've done a bunch of firsts. Our goal is focused on securing next generation blockchains that we believe, Web 3.0 and the future of the internet will be, built on top of. And so that's in a nutshell, BTCS.
All right. And now how's the staking platform coming along? I know it was in beta and that people were able to get on there. Are you able to actually stake and everything now fully with the platform?
So right now we've got the data analytics component open in beta, so you can go in there, connect multiple exchanges, and review the performance of your portfolio compiled from different exchanges via read-only APIs. The staking as a service, we've got all the validator nodes up and running for the ones we've announced, such as like Kusama and Cosmos, and I won't go through the whole list, but so that's there, and then we're building the staking as a service overlay. That would basically make it easier for users to come in and help them through the process, because it's non-custodial staking. We're not going to be taking possession of people's crypto. You would keep it in your own wallet, whether it's a MetaMask wallet or whatever it may be. Obviously it may depend based on the specific blockchain, but that's coming along, and we're sticking to the timeline of having it open, likely in beta for by the end of the year.
All right, perfect. Now, as it being a staking platform with certain proof of stake chains like Cosmos Atom, for example, as you mentioned, normally your stakers, if you're staking directly to a node, you would be getting airdrops of other new projects popping up. Will that still be an option through your staking service to be able to get those airdrops?
We haven't disclosed anything on that yet. I mean, we're doing a couple things I think that are unique compared to what others are doing. And right now we're looking to build the platform in such a way that, most of the time when you stake, you delegate to the node, it's non-custodial, and then the network actually pays you. We're looking to process those rewards through BTCS. Obviously, if you're following what's going on in the world with Ukraine and sanctions and regulation, as a U.S. public company, we want to make sure that we stay compliant, and that's one of our biggest focus now, is looking at what are the ramifications of paying rewards, whether that's even indirectly through the network paying. Are we facilitating who's in our nodes? So we'd have to look at the how the flow would work for something like an airdrop, but it's something that's on our, that's probably a little bit lower down on our to-do list right now. It's just getting it up and running and to the market.
Okay, so you guys have thought about it. It's just not a priority. The technology right now is the priority. Get that out.
Correct.
Now, on your earnings that you just put out, you guys smashed earnings, of course. I believe it was, let me see here, the exact number, I believe 747%. Is that correct?
Yep, compared to Q1
last year?
2021. Yeah. So I think that's around the time we first started talking, right? We were still on the bulletin board. I don't think we had expanded the board. It was more of a business plan, right? And so we did 1.2 million last year in revenue, and 563 for the Q1 this year. I mean, obviously it's been a difficult time the last couple of weeks, to put it lightly, but we remain extremely optimistic for the coming years and quarters.
What is your thought on BTCS, especially with your expertise into cybersecurity, blockchain technology, all that type of stuff?
Well, what I've been looking at, especially dealing with the node validation and security from node to node, is like paramount. What I've looked at into different projects, because I know, of course, we talk about securing our own and providing security for our own. And so I was just looking through, different techniques, different softwares and things like that, seeing how BTCS is actually, they're a good example for me as a security person, looking at it, trying to be like, okay, I don't want to get our systems blown up. Let me go find somebody that hasn't got nuked yet, right? So that's been a big, I guess, learning variable taken in from BTCS and from other node validators out there. Just taking notes, man. Taking notes. I like it.
Yeah, because we do have the Framework Fortune blockchain project we are working on. It's been quite a bit of craziness. Eventually, though, we'll be bringing that out, bringing the layer 2 dApp to start out with here very soon. But that security, I think, is a main point that is on everybody's mind now after what just happened. I mean, we got to talk about it, because in your earnings report, Charles, you guys just added Terra Luna to your node validation, and then this just happens with UST and Luna. So what's going on with you guys as far as how you handled that whole situation and how you're hanging in there right now with this crash in the crypto markets?
Yeah, I mean, we're obviously exposed to the decline in the crypto markets. With respect to Luna, it was a very small portion of our crypto holdings. We had 100,000 invested in Luna, so it really didn't move the needle. Obviously, that value at the current prices is near nothing, and the way we account for things, they're effectively written off if it drops, and they never go up. We could talk ad nauseum about Luna. It's really interesting in how big UST got, and the balancing mechanism using Luna is crypto economics to keep that peg at $1. Clearly that failed, right? Mm-hmm. And the fact it got as big as it did really beckons the question of how well tested are these algorithms that secure the peg, and clearly it was not well enough, or maybe the right circumstances came to pass. So I think it's a lesson learned for everyone in the crypto space. I mean, having been in the space 8 years, I mean, it was a $100,000 position. It was probably one of I think our nearest smallest position. And one of the things we looked at was, okay, it's very popular. We want to get a validator node up and running, so we include it in the staking as a service. But they're much more promising blockchains in terms of what can be built on them in terms of Web 3.0, whether that's Ethereum's obviously we're most bullish on that. It's been around the longest. There's so much built on it. I think there's, and from a risk reward profile, it's probably less. When it came to something like Luna, it was like, how do we not include it? Hindsight's 2020, right? Before it blew up, like, how do you not add a server and get enough tokens in there to get that validator node up and running, because there's a demand for it, and if we can run that node and have it be part of our platform, that was the thinking at the time, is we should do that. And we did our due diligence. We liked the we liked the project. The reality is the algorithm didn't hold, and I think it looking ahead to other algorithmic stable coins, it really beckons the question of, do you even need them? Right. And what I mean by that is, for everyone that's like call it a crypto maximalist or a Bitcoin maximalist that believes everything needs to be decentralized, right?
Yeah. Why would you need a stable coin? The same way. Yeah.
If you think everything needs to be decentralized, why do you need an algorithmic stable coin pegged to the dollar, because if it's pegged to the dollar, you have all of the risks of inflation, the government putting more money, you pegged it. So if you're going to say, hey, let's get a stable coin to facilitate the movement of money quickly across borders, right? USDC is a feasible option. Obviously, there's Tether. I think that's, got some question marks, or a more checkered history, I think is a better way to put it.
Yeah.
Potential question marks with respect to, the collateral behind the, backing the peg. But USDC is a great example, and I've used that to move money internationally, where if I had to go send wires, I would have never gotten things done in time. I invested in a crypto project, and I had to move money to, a fund in Abu Dhabi, and that would not have happened. And I had half day to do it. It would not have happened had I had to move it from my crypto account to my bank account, send an international wire. I'm going to the bank. I got to get there before. Now with COVID, you had to make an appointment, right? Because you're going to see a person. So it was by appointment only, to follow their, procedures. I was quickly able to use USDC, right? And so in that scenario, I think, do you really need an algorithmically pegged stablecoin? If you're going to peg it to a currency, like just back it with the fiat, right?
I have a problem with it all around, because I don't believe fiat currencies are stable currencies. So how can you have a stable coin off of a fiat currency in the first place, which is like my biggest argument against it.
Well, and that's the next point. You're solving a problem that doesn't really need to be solved, in that if cryptocurrencies were more stable, you wouldn't need a stable coin, right? And that's just going to take time, right? Bitcoin isn't used as a currency, one, because transaction speeds are slow. Obviously, with Lightning networks, you can kind of bridge the gap, which is not the most elegant solution. But, with the Lightning networks, Bitcoin could theoretically be used as a currency. No one does it, because everyone wants it to go up, right?
Yeah.
And so how do you get a currency where people are going to not want it to go up, happy to have it be stable, and then spend it on a day-to-day basis? And then all of a sudden, you can start not needing a stable coin, because you have a world crypto. And I don't know what that could be. Maybe that's Litecoin. Maybe it's, right now, the market's just too small, so that you have volatility over the last, call it, almost 10 years. You've seen it go from, how many times has Bitcoin been called it's going to fail, or crypto is going to fail? We're kind of seeing that now.
It's tulips. It's tulip mania.
Yeah, it's tulips. Bitcoin's down from 60,000 to 30. It's tulips. Like, wait, okay, I remember when Bitcoin was 130, and it was tulips and for criminals, and then it went to 1,300 and a crash. Now, it's like, come on, over once you just kind of zoom out, you're like, all right, let's look at this from a 5-10 year perspective. Most crypto assets, unless they're completely failed projects, and there's a bunch of those, right?
Oh, of course. Well, that's with any new tech sector, businesses, anything. I think it's 80% of businesses don't make it in the United States, so it's no different. It's just a new sector, pretty much.
Yep, without a doubt.
With the Cosmos ecosystem being where Luna was built, Terra Luna blockchain was built, I vote on proposals for Osmosis and Cosmos Hub itself, Juno. With Luna UST, that whole crash that happened, Osmosis, the exchange, held up very, very well, which I think is a very strong sign. Many of the developers from Luna UST are going into Cosmos Hub, Juno, and Osmosis. And the fact that Osmosis took all that selling pressure as a newer exchange was really impressive to me. And then we voted on proposals to immediately switch UST and Luna to now USDC, like you were saying, DAI, and then Luna to wrapped Bitcoin and wrapped Ether. Because a new project that popped up in the Cosmos ecosystem, AXIE, basically make chains, smart contracts, all of that in between other chains, and wrapped Bitcoin to be able to move it across all the networks. Now, wrapped Bitcoin can actually be used to buy NFTs. But like you said, who wants to get rid of their Bitcoin for anything else?
Well, look, if it's for an NFT, right? I mean, that was kind of tulips, right? Like, I saw that one coming. that was the easy one. Like who's buying a monkey smoking a cigar for $3 million? Well, they think that it's going to be worth 9. That's why, right? They really think a 20 by 20 pixel image, that my daughter could have drawn has that value. And it's like NFTs have tremendous value in their use case in the economy. Whose tweet sold for like 3 million and the guy tried to sell it and it was like the highest bid was $300, right?
Yeah.
I forget which.
I think it was the easiest use case of NFT technology and the easiest for people to adopt. Like you say all the time, adoption is very, very important for ease of use. Like most people don't want to spend a lot of time trying to figure out how to set up all this stuff. So it was easy to buy NFT art. It was just easy, and it was easy for people to post it. And, it's just the first little bit of NFT technology, the first little icing on the cake. And, of course, the icing is going to fall off once the reality sets in and you realize you bought ownership to like you said, a picture of a monkey smoking a cigar. So
and maybe that does have value. I mean, look, art's in the eyes of the beholder, right?
Yeah, exactly.
That's a tougher one, but I think that the tweet was a perfect example of
that too.
Someone jumped in and it's musical chairs at some point. Like, all right, you don't have a chair. Your 3 million investment's worth a couple $100,000. But it's on the NFT thing, it really was 2 things, right? One, you had something that was really easy to do. So you had user adoption. And 2, it solved the problem, right? There was no way for artists until now to monetize and get reoccurring revenue out of their work, right? And there was no incumbent player there that they had to push out of the way, right? Like, that's why Christie's and these auction houses and everyone else, like he gets paid every time his art resells. And I actually think, like, if you look at his piece of some of his work, that's like real art, real digital art. Now, granted, I don't know if it's a bit rich for my blood, but to me, I can at least say, okay, someone put a lot of time and sweat into building something that's unique that's I can say, hey, that's art. That should have a real value. But he gets paid every time someone resells the art. And that's something, if you look at like a Picasso, like, geez, I mean, you look at artists from back in the day, like, people were selling stuff to pay for food, right? And then they get really famous and their art's worth millions, like they don't get any benefit. So I think with NFTs, they took off because it was really easy. The technology was allow for it to occur on the blockchain. And then you add that to, no incumbent players that had the market. So it was a brand new market with a way for people to monetize something that they've been dying to monetize for a while. And it's like the perfect storm. Like, NFTs are going to go, right? Like, it makes sense. And that's why we struggle with so many other business models, is there's an incumbent player there that just is not going to give up their lunch easily, right? They're just, it's not, they're not giving it away.
No. And I think it taught a lot of developers some lessons about NFTs and the use cases they can be used for, because now we're seeing, which I think it was the next obvious step for NFTs, all of the blockchain gaming. Like, Immutable X platform built on Ethereum is probably the best platform out there so far. They have their own flagship trading card game where you get paid out in God's tokens, their native token, and you earn the NFT packs and all of that. So with a trading card game or just any game like that, that's a better use case to me than just art